Let's bring in Rashesh Shah from Edelweiss then. Rashesh, hi, morning. There's a divided opinion of RBI's rate cut. Many feel that RBI has indeed front-loaded the rate cut when commodity prices are high and global growth has been anemic.
I think it's hard to criticize this. I think what the RBI has achieved is given a positive momentum to the whole thing. Everybody is expecting a 25 basis point cut. I think a 50 basis point cut is a strong signal that we want growth back and we're going to make cost of capital and availability of capital a lot easier. So if they have front loaded the cuts, I think it's a good thing because you don't want to do this in a very slow way because then the expectations in the market will catch up. So I think positive surprise to the market on this has been a great achievement for RBI.
Hi Rashesh, Nikunj also joining in. Rashesh, for the fiscal FY12 Indian markets, the benchmark indices got hit by about 10%. Do you think for this fiscal, which is FY13, we are likely to regain and much more?
I'm not sure how much the gains will be, but I'm fairly certain that FY13 will be an improvement over FY12 because I think FY12 was almost like a perfect storm. Everything that could go wrong for India had gone wrong, from the currency to the interest rate cycle to the liquidity cycle to the government policy paralysis to everything else. So it was almost like a perfect storm. I don't think FY13 will be as bad. Also, you should remember FY12 expectations were still fairly high when we came into the year. I think we are going into FY13 where complete gloom doom is there. Everybody has written off India. Our own expectations are fairly low. So I think on both accounts, the fact that a few indicators will be positive for this year and the expectations are going to be fairly low. So the chances of a positive surprise, and usually equity markets always react to positive surprises. So the chances of a positive surprise are much higher for FY13 than they ever were for FY12.
Rashesh, are you bullish on global commodities or businesses linked to global growth, broadly sectors like IT and pharma?
I think the global market has started slowing down. I think China is slowing down. On the Eurozone also you will not see a lot of growth. So it may not be a great year for export-oriented companies. But along with that, commodities, I think our view is commodity prices will be softer in this year because of the slowing of the global economy. So given all of that, should be positive for India-oriented companies, for domestically focused companies, especially as we said, consumption is an evergreen story in India, but at a price. So I think consumption will be an investment opportunity for the safe, kind of investors. But as the economy comes back, as the cost of capital starts coming down, you will see quite a few other investment opportunities also.
Rashesh, if you are bullish on consumption as a theme, what is the best way to invest in consumption as a theme? Buy banks which are proxy to consumption, or buy autos which indirectly benefit because of consumer appetite, or buy direct consumer names, keep it safe and simple?
I think consumption is a broad range. I would say autos and FMCG companies are a good, very direct, play on the consumption market, especially companies which have a rural presence and who are growing on the back of the rural market. I think financials, I would wait for the first 5-6 months because the NPA cycle is still on the rise. I would allow the NPA cycle to start, flattening out, allow credit growth to come back. And I think our view is that after the first half, you will see the NPA cycle coming down and the credit growth cycle going up, and that might be a good catalyst for all the banks and the financial services.
So Rashesh, where would you advise viewers, looking for absolute gains to put their hard-earned money to work?
I think given the expectations and the current prices and all that, I would still be fairly bullish on equities, especially if you can take a 3-year, 5-year view. I think a lot of the companies in the mid-cap segment, a lot of the companies which have had a very harsh last couple of years should start coming back. As I said, I think auto and banks will always be evergreen sectors in India because the kind of growth opportunities that are there. So I think equities would be my first pick. I would say real estate all over India. I think real estate has corrected quite a bit. We do think at least for investors to buy their own house, it will be a great, in this year will be a great year. I think, home loan rates will also hopefully come down after the first half. So given all of that, should not be a bad year.
Rashesh, now that you've identified a broad asset strategy for our viewers. Let's look at some money-making ideas. Do you think within the mid-cap space for this fiscal, which is FY13, we could get not one but handful of multi-bagger ideas?
I think our advice would be, as I said earlier, in the small cap, mid cap stocks, because I think I think getting multi-baggers in all the themes that have already been explored and understand is going to be harder and harder. But there are a lot of small cap, mid cap stocks which have got hammered, which are good companies, not small companies. They are fairly large. The equity bases are more than 1,000 crores and all for a lot of these companies. They are good promoters, good aspiration. They've been making the right kind of investments, but the last few years have been very challenging for them. So if you can identify all these companies, you might find multi-bagger in that over the next 3-5 years.